And ultimately, as investors, it seems like we're reading way too much into this Palo Alto Networks versus Crowd or versus Zscaler.
So let's just put the competition between these companies aside for a minute, because there's plenty of room for all of them to grow and thrive alongside each other.
Hey everyone, welcome back to Chipstock Investor. We're wrapping up earnings season, but we wanted to get to a couple more cybersecurity companies. Today we're going to focus on CrowdStrike. Broadcom is coming up later this week. We're going to be doing another live event over on our Discord channel to go over some of these companies that we've covered in recent weeks. That will be at 11 a.m. Pacific and 2 p.m. Eastern in the United States. You can ask any questions and make any comments that you'd like. If you have access to that already, fantastic. If not, you can get access to our Discord channel by joining our subscription here on YouTube or over on our Ko-fi page, and you'll get some cool stuff for just $5 a month.
Less than a Starbucks, definitely less than a Starbucks event day, probably even less than most Starbucks tall drinks these days.
Still not cheaper than Dutch Brothers, I don't think, but
No. Well, that's out of the way. Your world's worst marketing team making an attempt at doing a better job here. Shall we talk about cybersecurity?
let's do it. It seems like a war of words at some of these cybersecurity company earnings calls. And yeah, we need to address that.
Yeah, we do. So if you missed it, link here to the recent video and write-up to cybersecurity pure play leader Palo Alto Networks and their new and controversial go-to-market strategy of supposedly giving away products for free to try and eat up market share. To be completely clear, they are not giving away product for free. What they're doing is they're going to try and install their product with customers long before customer contracts with competing cybersecurity providers expire, to avoid customers from simply renewing those old contracts because they waited too long to make the switch. In our view, that's just keen understanding of human psychology, not simply just handing out freebies, but we'll digress on that for the time being. But Kasey, it seems like CEO Nikesh Arora's comments from that Palo Alto Networks earnings call was really set off a bit of a firestorm among investors, right?
Yeah, absolutely, Nick. It seems that analysts could not help but try to bait both CEOs of Zscaler as well as CrowdStrike. We have some select comments from both of those CEOs in our show notes, but let's dig a little deeper into CrowdStrike and their most recent earnings call. CrowdStrike is definitely not one to shrink back from some of these comments and their competitors. CrowdStrike's co-founder and CEO, George Kurtz, started the last earnings call by calling out Palo Alto Networks, although not initially by name. He said that CrowdStrike is the only single platform, single agent technology in cybersecurity that solves use cases well beyond endpoint protection. Kurtz goes on to say, leaving stitched together point products and PowerPoint platforms behind, CrowdStrike customers realize the benefits of superior outcomes and total TCO, or total cost of ownership. He also makes that initial shot at Palo Alto Networks by saying, free is never free. Customers understand the difference between product pricing and the total lifetime cost of operating inferior technology. So some very bold statements by CrowdStrike CEO, George Kurtz.
Yep. Okay. Just a brief rant here, I promise, because if you're new to listening in on these cybersecurity conference calls from Palo Alto Networks, from Zscaler, now from CrowdStrike, it can be easy to get fooled here, okay? For all of the braggadocious talk taking place among these companies, here's another thing George Kurtz said just a couple of lines later, okay? The current macroeconomic environment remains stable and consistent with prior quarters. We expect continued deal scrutiny throughout this coming year. We remain focused on operational excellence while delivering market-leading growth at scale, assisting organizations of all sizes to consolidate and improve their cybersecurity. CrowdStrike is growing faster than most right now at scale, well over 3 billion in annualized revenue now. So yes, there is competition brewing in this industry. We talked about this in our recent cybersecurity industry high level deep dive and cybersecurity industry flowchart. But this is where it's easy to get fooled by all of these conflicting remarks, folks. Okay. CrowdStrike is on a completely different part of the cybersecurity industry flow. It's a different type of cybersecurity than Palo Alto Networks, than Fortinet, than even Zscaler. They are meeting in the middle, but this is a market that's now worth well over $200 billion a year in annual spending, expected to grow at a low teens percentage CAGR for the next few years. Not to mention the fact that IT overall is $5 trillion a year in spending, outpacing global GDP growth. So let's just put the competition between these companies aside for a minute, because there's plenty of room for all of them to grow and thrive alongside each other. So, Kasey, I think what we'd like to do here is just peel back these layers here of, CEO fist pumping and trying to talk down on their competitors, and talk about what's really going on and what investors really need to focus on when deciding whether or not to buy one of these stocks. Big hint, it isn't cybersecurity CEOs talking big and putting each other down. That's not a reason to buy. We do not need to feed into and fuel these guys' egos. Okay. These are some of the richest people on the planet. They can go head to head with each other if they want, but the real reason they're there is to grow the business and deliver shareholder value over time.
Yeah. As investors, we need to focus on how these companies are actually operating, how they make money, and why a certain company should or shouldn't be in your portfolio. And ultimately, as investors, it seems like we're reading way too much into this Palo Alto Networks versus Crowd or versus Zscaler. You can throw any competition piece together, but we really need to focus on these newer cybersecurity companies versus all those old legacy endpoint solutions like Microsoft, Gen Digital, Checkpoint Software, right?
Yeah. And we could even throw Broadcom's acquisition of the enterprise segment of Symantec into the mix, as well as the more recent VMware, because they do get a little bit of endpoint security with that purchase as well, which we'll talk about again at the end of this week. And also, Kasey, let's bear in mind here that, remember, in January 2023, Microsoft CEO Satya Nadella said that Microsoft was hauling in over $20 billion a year in security software sales. They didn't reveal what that number was in January of 2024 in their most latest earnings update, but it's probably higher than it was a year prior. And Microsoft, time and time again, has been one of the root causes for a lot of data breaches going on out there in the world. So let's stop pitting Palo Alto Networks and CrowdStrike and Zscaler and Fortinet against each other and pit them against some of the older players. We've got another quote here from later in the earnings call from George Kurtz, where he pivoted a bit and, in our opinion, took shots at the right culprits.
Yes, he really did. He said disjointed point feature copycat products clutter the market, attempting to band-aid symptoms instead of curing the illness. And then he says OS vendors, or you can read Microsoft in that, use their market position to create a monoculture of dependence and risk. And as you just mentioned, Nick, serve as a breach originator. And then even worse, multi-platform hardware. You could think of Cisco in that case, evangelized their stitched together patchwork of point products, masquerading as thinly veiled piecemeal platforms.
Yeah. And of course, Cisco in process of acquiring legacy data log analytics and CM software provider Splunk as part of that patchwork strategy that they're employing. So I think end of story here is this is not so much Palo Alto Networks versus CrowdStrike. And let's illustrate it using our cybersecurity industry flowchart. You can see they really originate from two very different parts of the global data flow. CrowdStrike is a provider of endpoint security and extended detection and response software. This is software that is managed via the cloud that helps protect endpoints, PCs, laptops, smartphones, industrial IoT devices, whatever, that operate at the network edge. If you work from home, you'd be a perfect candidate for CrowdStrike. And CrowdStrike is slowly working into other adjacent areas like identity management and access management, competing with companies like Okta, and as well as extending their software into actual cloud security and observability. By contrast, older companies like Palo Alto Networks, as well as Fortinet, harken back to the day before the cloud. And so they're starting from a very different point in this data flow cycle. Their platforms are rooted in network security and hardware-based firewalls, and they've been expanding into cloud and software service as well. So they're starting to rub shoulders with CrowdStrike in the middle here, where these two parts of the data flow intersect or meet, I guess you could say. But all of this talk about platformization and consolidating of market share and competing with each other, we really think this is overblown.
Ultimately, customers, most of which are not tech companies, need simplified cybersecurity solutions with fewer vendors. But that said, redundancy is a key tenet of good digital security. There needs to be multiple layers of defense so that if one security system fails, another safeguard is in place to block an attack. Okay, let's go ahead and segue into CrowdStrike's financials because this can help explain the real reason that CrowdStrike's stock is skyrocketing and the real info that us as investors need to focus on. Take a look at a couple of charts that we have prepared. Revenue for Q4 2024 was up 33% year over year. Adjusted net income up 111% year over year. Free cash flow up 35% year over year. And then looking at the full year, fiscal year 2024, you can see a 36% increase in revenue over 2023, a huge 104% increase in adjusted net income over 2023, and then free cash flow up 39% year over year in 2024.
So the story here is about operating leverage, not about being better than your other cybersecurity platforms. Operating leverage. And in particular, Kasey, you can see the operating leverage really taking hold in GAAP net income, which now means even the so-called value investor crowd has something to latch on here. So in Q4, the just reported Q4 GAAP net income of 53.7 million compared to a net loss of 47.5 million last year. And then on a full year basis, the company also GAAP profitable, 89.3 million versus 183 million loss a year ago. That is operating leverage. This is really good stuff going forward for CrowdStrike. A whole new batch of investors that look for just GAAP profitability are probably now going to be tracking this business going forward because of these two metrics right here. That probably alone explains the big 25% increase in after hours trading.
The balance sheet for CrowdStrike is also very good. They've recently made some tuck-in acquisitions. You can think about Flow Security, which we'll talk about a little bit more in a moment. But the company ended the fiscal year with $3.48 billion in cash and short-term investments and another $56 million in long-term investments, and debt of only $742 million. In regards to fiscal year 2025, we have another chart prepared to show you the implied growth for CrowdStrike year over year, 28 to 30% in revenue growth expected for 2025, as well as 25 to 32% adjusted net income growth year over year. And regarding the adjusted shares outstanding, they expect a 2.6% increase, which includes future dilutive share count.
Important note, CrowdStrike is trying to make this push to reach 10 billion in annualized recurring revenue, or ARR, a subscription revenue metric. If it makes that milestone, there's lots of profitable growth ahead for the company, especially if they can continue to get that share count via dilutive events like their debt, which is convertible to new stock, as well as stock-based compensation to employees. If they continue to get that under control and realize that operating leverage that they're really just at the beginning of unlocking here, this could be well on its way to becoming the world's largest cybersecurity company as measured by market cap and eventually maybe also by revenue as well.
Palo Alto Networks hauls in $7.5 billion in trailing 12-month revenue, more than double what CrowdStrike does currently. And it's still growing at a 20% year over year rate as of their last report. So both companies are very, very profitable and well-run cybersecurity companies.
Important little side point there, but let's talk a little bit more about CrowdStrike's advantage as really a platform business as well. It's trying to do something very similar as Palo Alto Networks, just trying to consolidate market share to itself. One way they've been doing that is with that announced acquisition of Flow Security. This is a likely very small purchase. We'll get some details on exactly how much they're buying it for later on this year because it's a cash purchase. So it'll show up on the statement of cash flows. But George Kurtz said on the earnings call that in CrowdStrike's view, this is a one-of-a-kind asset that they're picking up.
Yes, he said that Flow stood out as the most unique technology amongst a sea of early startups by delivering the industry's first and only cloud data runtime security solution. With Flow, data is analyzed pre and post decryption, enabling precise and instant results, real-time and continuous data visibility, a live view into data risk, not just at rest, but also in motion with LLM or large language model powered adaptive policies. Data leakage prevention, the ability to block data exfiltration, including the data exposed through Gen AI services. Simply put, Flow is the industry's first and only cloud data runtime security solution.
And on that last point in this quote here about data exposed through Gen AI services, again, in our cybersecurity industry flow, we talked about one of the new emerging risks companies is what if your employee takes sensitive data and plugs it into a generative AI chatbot? Huge, huge problem and very few solutions out there to prevent that from happening. It looks like CrowdStrike with its endpoint software residing on devices themselves can help mitigate this perhaps by preventing that from happening. So something to watch. I think this is of keen interest to us going forward as CrowdStrike shareholders to see how this new asset pans out for them, but it looks promising.
As we've talked about in the past, cybersecurity leaders are in a great position to begin expansion into other areas of the vast software industry, the top of the digital economy hierarchy funnel. Flow is an early start for Crowd in this push, bringing it up to other cloud observability companies like Splunk, Datadog, Dynatrace, and data in motion services like Confluent. Nick, is CrowdStrike stock a buy?
Well, it's very expensive to use that overused expression, especially after skyrocketing 25% on the earnings update. But operating leverage is the reason for continued optimism. That rising gap profitability, again, really gives a lot of new investors something to track with this business. So let's talk about the valuation based on enterprise value, which is market cap plus debt minus cash and equivalents of about $85 billion in after hours trading on March 5th. CrowdStrike trades for about 85 to 90 times expected adjusted net income for fiscal year 2025, the year ahead. That should equate to a bit less premium for free cash flow, since free cash flow for this company tends to be a bit higher, and maybe a bit more premium based on GAAP net income, which is of course going to be lower than the adjusted figures. It's expensive. But Kasey, what else is new? We've owned this company since 2019, not long after the IPO. We've steadily added to it ever since. And by some metrics, you could actually argue it's cheaper now because of the gap profitability now coming into play. If in doubt, and you want to bet on a basket of leading cybersecurity companies, we think CrowdStrike is most certainly in that conversation. But if in doubt, use a dollar cost average plan, build a position gradually over time. There's no need to chase stock price, in our opinion. At least that's not what we're going to do. And so we're going to stay the course and just continue gradually adding to this company over time.
In case you missed it, we covered CrowdStrike as well as Palo Alto Networks, Fortinet, and all of the other cybersecurity companies in our Cybersecurity Industry Manual for 2024. If you've not seen that video yet, you can see it right here. And we'll make sure we put a link to our manual in the description of this video. You can buy that manual over on our Ko-fi shop, or if you are a monthly member here on YouTube or on Ko-fi, you'll get it in our Discord channel. And on Tuesday, March 12th, make sure you save the date. Over on our Discord channel, we will have a live question and answer event, 11 a.m. Pacific time in the US, 2 p.m. Eastern time in the US. Make sure you check that out and get your questions ready. Make sure you're subscribed to the channel. If you have not already, we really appreciate all of our subscribers and viewers here at Chipstock Investor. Thank you for being part of our community. See you soon.